Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification of market behavior lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Let's start with German Flash Manufacturing PMI related to Euro, and we're going to discuss Euro dollar currency pair. Now, what is the German Flash Manufacturing PMI? The German Flash Manufacturing PMI stands for Purchasing Managers Index, is a key leading indicator of manufacturing sector in Germany, which is the largest economy in the Eurozone. Compiled from a monthly survey of purchasing managers, the German Flash Manufacturing PMI Index tracks metrics such as output, new orders, employment, supplier delivery times, and inventory levels. A PMI reading above 50 indicates expansion in economy, while reading below 50 signals contraction. Given Germany's outsized influence on the Eurozone economy, this release is closely monitored by investors, policymakers, and traders. Now, on May 22nd, the 48.8, the previous number was 48.4, the forecast was 48.8. Now, market obviously anticipated a slight improvement in the German Flash Manufacturing PMI, rising to 48.8 from the previous 48.4 number. While the figure remains in contraction territory, meaning it's still below the 50 number, the expected uptick suggests early signs of stabilization following months of weakness. However, the broader outlook remains fragile amid weak demand, elevated input cost, and ongoing geopolitical uncertainties. So, as far as the market impact is concerned on the euro dollar currency pair, still below the expected level of 50, but the forecast was 48.8. So I would say it actually meets the expectation. To take a stand amid mixed, the German Flash as a crucial gauge of industrial momentum. Any surprise upside or downside could influence short-term euro-dollar movement, especially market expectations regarding the eurozone's recovery and the ECB's policy direction. So the conclusion is leading into release the euro-dollar trade range. Let me show you the chart. Euro dollar, it did try to go up a little bit. That was the expectation. It went a little bit higher, it didn't work. So forward surprise. However, the slight improvement from the prior month lent mild support to the euro, prompting a modest upward move in euro dollar currency pair. Next one is the retail sales for the United Kingdom. The currency pair we're going to discuss is the GBP USD currency pair. Now, what is retail sales, M over M? M over M means month over month. The retail sales month over month measures the percentage change in the total value of retail goods sold in Great Britain compared to the previous month. As a key indicator of consumer spending, a major driver of the UK economy, it offers insight into household consumption trends. Because consumption makes up a significant portion of GDP, the retail sales data is closely monitored by economists, policymakers, and traders. A stronger reading typically reflects robust consumer demand and supports the British pound, while a weaker print may point to economic softness. Now, on May 23rd, 2025, the retail sales data, the actual data that we got is 1.2%. The previous number was 0.1%. The forecast was 0.3. So we actually, beat the expectation. So market was expecting a modest gain in retail sales for April, forecasting 0.3% increase, swing March upwardly by 0.4% pace, while still indicating growth, reflection of persistence, cost of living pressure, higher borrowing costs, and cautious consumer behavior amid ongoing economic uncertainty. So the impact that we got is we got a good number, a stronger than expected result, and this point to resilient consumer demand, potentially reducing the likelihood of near-term Bank of England rate cuts, and this obviously supports the GBP and lifts the GBP USD currency pair. Now let me show you the chart of GBP USD currency pair. This is the chart of GBP USD currency pair, and we got a new high in price action. Now, I do expect a top in GBP USD currency pair as well, because if you check out the technical side, is now above the 70 levels, so it looks overbought. Okay, so after getting the news announcement, we got overall bullish price action in GBP USD currency pair. So my overall analysis is, with inflation gradually easing and the Bank of England signaling a cautious stance, the retail sales data offers an important gauge of household spending strength. The significantly expected 1.2% increase surprised markets and suggests that UK consumers remain more resilient than anticipated. The upbeat data boosted confidence in the UK economic outlook and lowered market expectations for imminent Bank of England rate cuts, prompting a rally in the pound and a move higher in GBP USD currency pair. Before the data release, the GBP USD was actually going sideways. If I go back to the chart of GBP USD currency pair, you can see we got a sideways looking price action before the data release, but after the data release, the sharp upside surprise resales provided a bullish catalyst for the British pound, pushing the GBP USD higher as markets reassessed the likelihood of policy easing in the near term. Next, let's also discuss about the euro dollar and USD Swiss franc. Okay, euro dollar currency pair. I was expecting actually a bullish leg, and I was hoping that the price is probably going to stop over here, but didn't. It went up a little bit higher. It's quite possible that euro dollar continue the rise. Okay, what I mean by that is the euro dollar currency pair actually looks bullish. If you check out the weekly chart, we got this pullback, but then market actually rallied up again after that as well. So I don't think that euro is going to drop further. The way I see euro dollar is probably going to print a new high before it actually goes back down. Next one is the USD Swiss franc. Now the USD Swiss franc, we got the rally, but it failed to stay higher. So the way I see USD Swiss franc currency pair is most likely going to, I would say it's most likely going to drop. Okay, so let me delete this one. The way I see USD Swiss franc is going to continue the decline. If we do get a bullish breakout above 0.8481, then we might say that okay, price action might try to go up, but otherwise it looks bearish. Market should manage to stay and hold the levels above 0.8329, but it didn't. This is the weekly time frame, and if you take a look at a daily chart, uh, the way I see, we got this big drop in price action, and it didn't exactly hit this level. It's trying to bounce back up. I would prefer to look for sell trades instead of a buy trade inside the USD Swiss franc currency pair. Next, let's take a look at current week economic events and data releases. The first one is on May 28, 2025, and it's the upcoming interest rate decision. Let me explain a little bit. What is the official cash rate, the OCR? The official cash rate, or the OCR, is the benchmark interest rate. I'm talking about the New Zealand dollar, and the currency pair we're going to discuss is the NZD versus USD currency pair. The date and time is 28 May, 2 a.m. UTC time. Now, the OCR is basically the benchmark interest rate set by the Reserve Bank of New Zealand. It serves as the primary tool for influencing short-term interest rates, aiming to control inflation and support sustainable economic growth. Adjustments to the OCR directly after borrowing costs consumer demand, business investments, and overall financial conditions. The Reserve Bank of New Zealand typically raises the OCR to contain inflation and cool an overheating economy, while a rate cut is used to stimulate growth by lowering the cost of borrowing. The previous number we got is 3.50%. The forecast is 3.25%. The actual data is to be released. So the actual data did not release yet, but it is going to be released on May 28th. The markets are widely expecting the Reserve Bank of New Zealand to cut the OCR by 25 basis points to 3.25%, continuing its cautious approach to monetary easing amid softening economic indicators and easing inflationary pressure. So the impact on NZD USD currency pair that we're probably going to get it is that a larger than expected cut would indicate more aggressive easing by the Reserve Bank of New Zealand. This would likely weaken the New Zealand dollar, pushing the NZD USD lower as traders price in a more dovish policy path. So far, always notice that this is the breakout. Let me delete all of this here. Over here, you can see we got a break above this level, and it actually kind of failed over here. Maybe market wants to move a little bit more sideways before it actually went back up, or it could fall back down. We will see how it goes. As far as the financial data is concerned, if the OCR matches the expectations of 3.25, so this means a rate cut in line with forecast may result in a limited move in NZD USD currency pair. However, the market reaction will heavily depend on the tone of the Reserve Bank of New Zealand statement. A dovish outlook could still pressure the New Zealand dollar, while a neutral or cautious tone might offer limited support. So if the OCR is higher than expected 3.5%, uh, you know, then it means that that could lead to a rebound in NZD USD as market reassesses the likelihood of future easing. So with signs of slowing domestic demand and moderating inflation, the Reserve Bank of New Zealand is expected to proceed with another rate cut. However, the key focus will be on the central bank and fast. So any hint of a more aggressive easing cycle may accelerate NZD selling pressure. As of now, the NZD USD has been, trending sideways ahead of the decision, and this indicates that traders are somewhat confused. Half of the traders are buying, half of the traders are selling. It looks like to me kind of a sideways price action going on. So on May 28th, the OCR decision is a pivotal event for New Zealand traders. While a 25 basis point cut is broadly anticipated, market reaction will hinge on the Reserve Banks of New Zealand's tone and outlook. With New Zealand dollar versus US dollar already shows a slight selling pressure, any dovish surprise could fuel additional declines, while a less dovish stance could offer some sort of relief for the Kiwi. Next we have is the GDP for the Canada, and we're going to discuss a USD CAD currency pair. Now, what is GDP? M over M. The GDP stands for gross domestic product, and M over M means month over month. Uh, it measures the change in the total value of all goods and services produced in Canada compared to the previous month. It is a vital indicator of economic health and momentum, reflecting short-term growth trends. As one of the most closely watched economic indicators, monthly readings influence expectations for Bank of Canada monetary policy. A stronger reading often boosts the Canadian dollar, while a weaker result can weigh on it, particularly if it alters the outlook for interest rates. So the upcoming news data that we're going to get on May 30th, 12:30 p.m. UTC time. The previous number that we got was minus 0.2%. The forecast is 0.1%, the actual data to be released. So overall, after a contraction in the previous month, the economists are forecasting a modest rebound of 0.1%. That's the forecast in Canada's GDP for May. This improvement would suggest that the Canadian economy may be stabilizing after recent signs of softness, though growth remains fragile. Now, if you take a look at USD CAD currency pair chart, here it is. Overall, you see USD CAD actually, just keep falling down and down and down. And the way I see it's probably going to drop even further. As far as the technical analysis is concerned, we can easily see a nice, downward trend channel. Let me read this line and here. Okay, and I'm going to delete some of these arrows. Okay, so you can see right now we're getting a nice bearish trend channel, and price action is actually sloping downwards. Even if you look at this median line, it's still going overall down. So if the GDP beats the expectation is 0.1% number. If we get more than 0.1%, then it means that a stronger than expected figure would suggest firmer economic momentum, potentially reducing expectations for near-term Bank of Canada rate cuts. This could strengthen the CAD and push the USD CAD lower. Well, it's already going down. The trend is it's already bearish. Okay, so if we get the 0.1% or a number higher than that, then obviously I expect further weakness in price action of USD CAD currency pair. Now, if the GDP misses the expectation of 0.1%, then it means we are getting a weaker reading, and this could raise concerns about economic weakness and fuel speculation of further monetary easing for the Bank of Canada. This would likely pressure the Canadian dollar, driving the USD CAD higher. So if we get a bad number, I mean, if we get less than 0.1% number, then overall I expect a rise in USD CAD currency pair. It's probably going to rise up more. So the overall analysis is, with the Canadian economy recently showing signs of strain, the May 30th GDP report will offer whether activity is rebounding or slipping further. Even a modest beat could help shore up confidence in the outlook and support the Canadian dollar. Now, at present, USD CAD may remain bearish. You do see some range going on over here within these two blue lines over here. These are the most two recent swing highs and swing lows. Let me delete the rest of these. So as soon as we get the actual number, as soon as the actual number comes out, we will see how the market is going to react. But overall, it looks bearish. Okay. So at present, the USD CAD trend is bearish. It might move in a range bound ahead of the release, but any surprise, positive or negative, could spark a notable reaction, depending on how it shifts the expectations of Bank of Canada policy direction. So the upcoming GDP month-over-month release is a key data point for Canadian traders, while a 0.1% gain is forecast. The, so deviation from this figure and the underlying sector performance will drive short-term price action in the USD CAD. So traders should also watch for any revision to prior data, which could influence market sentiment. Okay, now let's take a look at euro dollar and USD Swiss franc currency pair and see what's going on. As far as the euro dollar is concerned, the way I see, I think euro dollar is going to rise up more. Same, and we got a breakdown over here, but price did continue the decline. It stopped and bounced back up. As far as the US dollar Swiss franc is concerned, it looks bearish, and you can see we got kind of a range over here. Okay. So the way I see USD Swiss franc is probably going to more, and the euro is probably going to rise up further. Next, we have the Australian dollar. Let's take a look at AUD USD currency pair. AUD USD currency pair, well, just keep pushing higher and higher. So the way I see, we might get a drop in price action, but overall it still looks bullish. This was the high which market took out. Here's another one, and then here's even we got another one over here. This ugly looking candlestick do suggest that price action is probably going to drop further. I'm going to move this one over here. This is the daily time frame. This looks like to me a spinning top candlestick pattern. It's a Japanese candlestick pattern. Looks like to me we got a double top pattern over here as well. So we will see how it goes. So we might get a top in Aussie dollar currency pair, but if that's really the case, then market should break the support level 0.6355 level first. Otherwise, it could go up further. Next one is the spot gold. Let's take a look at spot gold. The spot gold, I was expecting a bullish move, and we got it. Now, the way it's going, it's quite possible that spot gold is probably going to move sideways, and then overall I expect further upside inside XAU USD pair. The spot gold actually looks bullish. If you take a look at a long-term chart, let's take a look at a weekly chart over here. You can see that price action just keep printing lower swing highs and higher swing highs and higher swing lows. So it's an uptrend going on. It's like stairs steps over here. So overall, this looks like to me a nice uptrend going on inside spot gold currency. It's XAU USD, so it's a gold versus US dollar. So this trading instrument actually looks bullish, and even if you go down into a smaller time frame, you can simply draw a trend line over here. Here's a nice trend line. This looks like a nice bullish trend channel. On a short-term basis, if gold is going to drop and breaks this old swing low over here at 3120.36, then we might get a continuation to the downside. Overall, it looks bullish, and to me, this is just a pullback in price action going on. So after this pullback, gold is most likely going to rise up further, because you see, if the euro is going to rise up and the USD Swiss franc is going to drop, and we also expect a bullish leg in NZD and also in AUD USD. We haven't got the top in AUD USD, so this means even in pound, the GBP USD, you see the bullish leg over here. So the United States dollar is overall becoming weak. So this means also expect a bullish price action in spot gold. Okay, if you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. So what you have learned today, I discussed about the official cash rate, the OCR for the New Zealand dollar, and we also discussed about the GDP for the Canada. Then we also discussed the euro dollar, USD Swiss franc, Australian dollar, and the spot gold trading instruments. These are the assets you need to watch out for profits. What you should do next? Well, you can check out for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with the true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. So thank you for hanging around. See you at the next trading webinar on Tuesday, June 3rd, 2025, same time. So that's it for the time being from my side. Have a nice day and bye-bye.